Usdjpy hub, USDJPY. So we'll draw a price action from a weekly time frame, and let's see what the price has done on weekly. And we'll spot two highs here. The two highs I want to pay special attention to will come from October 2022 and Monday, July 2024. I like those two highs. So clone it. So technically you get your floor. Very accurate. So when we see the market is well structured, the market is well structured. Now you have a bullish channel. You have a bullish channel. So this is the roof, and the market is well structured, and this is the floor. So now you have a bullish channel. So these are the key points that form the bullish channel. And because they are weekly candles, I have my weekly zones. The most important thing we are watching out for is the breakout of the weekly candle body. As long as weekly candle body did not break my structure, I do not consider it as weekly break of structure. So on daily, you can have a breakout, but if by the end of the week, that is all I want to see. Then I have another structure from here. We have price return here, we have here demand floor, we have here supply room, and that technically gives us another structure. See, sometimes we're carried away by gold, there are other opportunities in the market. So in coming days, we are going to visit all the pairs. There is minimum of 20 pairs and scout for potential buy sell opportunities. When I say potential, it must be a potential opportunity. The chart must be clean. When the chart is not clean, it's an indication of foul play. So we must avoid all kinds of foul play. Because if you're patient, you will see that after some time, structure align. If the structure align with our strategy, then we go. But oftentimes when you see structure is disrespected, you see it tells a whole lot of story, and always better to avoid it. We have here after price updated supply is under a bearish leg. So we have here as an impulse leg, and impulse leg. So price on that note, it's also a supply leg. Let's call it a supply leg. And we have here some demand flow. So we have a breaker structure at this level, and price return to respect the structure, break of the supply rule. Next structure, the one price return after breaking the supply rule respected the demand flow. Broke the demand flow, respected the supply rule to continue selling after another touch, impulse leg. So it's an impulse leg supply rule. is our upward rally, and also as SR as support points, resistance and breaking structure, and our up is RS, resistance becomes support and breaking structure, and we have here as a descending trend line BT, and we have here as ascending trend line BT. So every time price returns to the floor, it's a potential buy, and price returns to the roof, it's a potential sell. But there's going to be a fast move because we have another break of structure this year. And in 2025, we are monitoring the US 10-year bond yield, 10-year bond yield, and we're also looking at its performance quickly. And we're also looking at DSY price action to see because as DSY continues to upswing, it's most likely all pairs across all windows will feel the impact. So these are things that we are monitoring for the year. And 2025 looks like a bullish year, going to be a bullish year for the US economy. So we have a structure here, a breakout from an ascending trend. Price went on to retest and retest, retesting high. So sometimes even when you have a breakout, the retest does not come down as the way you expect. Rather, most retests go on to break the previous high, whereby maintaining the trend. You see, after a breakout from this trend, an uptrend, price retested higher. It retested a higher zone instead of retesting. Most times, a lot of traders think when you have a breakout, the retest is going to be below the previous high. No. Sometimes price will go to retest above the previous high. Look at what price has done after price came on breakout structure. In the lower time frame, you're going to find a retest at this level. When you check your 5 minutes, 15 minutes, you'll find a retest at this level. But because we are dealing with weekly candle, you will see it. So this is why after you make your weekly charts, you go back on the lower time frame to observe a change in price action. Because whatever that happens in the higher time frame have happened in the lower time frame. There is no reaction today you see in the higher time frame that didn't happen in the lower time frame. So take note of that. So this breakout you see here, there's a retest on the lower time frame. You will find it in 15 minutes. If you don't see it in 15 minutes, you see it in 5 minutes. If you don't see it in 5 minutes, you see it in 3 minutes. If you don't see it in 3 minutes, you see it in 1 minute. But there must be a retest to break out of the structure. Then price return again to respect the structure. And we are expecting that UJ will continue this path, except timely intervention by Bank of Japan monetary policy. That is the only thing that will hinder price not to come here. That is the only thing. Minus that, I don't think, except timely intervention of Bank of Japan monetary policy. And you can look quickly, you will see where selling has happened. When price return here, we draw that sell completely to touch the floor. When price return again in the month of July, it was a complete bearish weekly candle drop until price got to the demand floor, where we have a stronger SRL and price has put it will continue. And price continue to come at this level. We are selling at the break of the previous high. It makes a sense, it makes decent sense. At this level also, you think of shorting UJ. At this level, short UJ, you will not be wrong. If you short UJ at this level as an investor or as a hedge fund manager, you are not making a mistake at this level. The reason is because you are selling at the break of the previous high. This was the previous high in the month of July, where UJ was exchanging for 160.643. So it makes a decent sense to see a break of that level, a break of that level, 161, 161,519, a break of that level, then you aim at this level, then sell down. Then it's going to be contested because it becomes a broken supply, it becomes a demand floor. So it now depends on the presence of the bearish leg. How powerful is the bearish leg? If the bearish leg is strong enough, then it can break the roof, just like price have gone in the past. This is a high. Now you look here, price came, broke this high. This is the week. So we're going to look at this is the body and this is the week. So, so you can see 151 level. 151 level was broken. Can you see here at this level? When price came here, it respected it at first. It didn't just break it. It had to respect it. So what does this tell you? That 161.894 level could also be respected. So you can set your sell order at that level. Having a sell order at that level will be bad, but it will be very tempting because price might come there and smash it. Then most likely that price will come there and respect it. As price when price came here, it respected this high, 151.763, before breaking the structure. But what happened when the structure was broken? A broken supply route became a demand floor, the foundation for uptick. So what happened that buyers have leveraged on this floor after price testing and the breaking it becomes a demand floor to create a new high, which made a timely supply roof that dropped price. At this time when price came back, it respected the structure on weekly time frame before breaking the structure on the subsequent week. And when price tapped liquidity from the demand floor, where we have an institutional trend line in the form of a psychological ascending trend line, the structure was broken. And you can see. But after breaking that structure, what happened? Price used it as a foundation for further uptick. And the price rallied, but didn't make past due to a structure which we are trying to find out why market sold at this level. Market have sold at that level because we have a structure at this level. You can see the structure. So market is well structured. So inability to break a particular structure will always lead market to retrace. At this level, you will see you have here. Now the question is that when a structure is broken, whether downtrend or uptrend, there is a probability for a retest. Now the question is, did the retest happen? Most times it doesn't happen. But whenever we have a break of structure, there is usually 90% of the time price comes back to the retest. Let's look at the structure and see if we can draw some lesson from that. We have here a resistance structure. And when price came, it broke the structure and respected it. So let's change the color to black. So when price returned here, it respected this structure as now a supply roof broken now becomes a demand floor and upticked. Now finally the demand floor was broken. When the demand floor was broken, technically a broken demand floor will become a supply roof. That is why price did not pass this level. That is why you have a sell. That is the reason you have seen sell here. Because the market is following structure. It's following structure. So you look at it, a broken demand floor, market returns as a supply roof. And now what happened now? When price came after picking liquidity from down, it broke a structure, used it as a support, and market continued uptrend. Now a broken structure, a broken supply roof is now a new demand floor that UJ most likely will continue to uptrend. So what we see here that will happen is we see a case of UJ coming back again to retest this level. At 155 level, 155, 155 level, at 154 level, you begin to consider going long on GJ. For me, I think GJ will seek liquidity at exactly this this move. That is what I think. Or the worst that can happen here, the worst that can happen here is for price to return to retest a breakout structure. So at this level, you can see that it's possible. Let's not make this thing messy. To get into buy position for GJ, you need to be very careful. You need a good point of entry. Your point of entry is going to be a retest of a broken descending trend line. So you can see here price have established here a supply roof, established a supply roof, break out from a descending trend line. If price returns here, it will make a good sense to see that price come back and disrespect the structure twice. So for price to come here, we might have a case like this because market always disrespect structure after respecting the structure many times. So price can just come and ignore it, break it, come down here, respect, disrespect it again, then respect it finally. Then go back to test the previous all-time high. So from here now, price might continue to consolidate for a while before breaking the structure, then go touch the roof where you have a new high. So this is what I see to be very practical. And if the liquidity pump for USD continues, you begin to see a new case where price will likely break the roof and continue to trend higher. So the Bank of Japan ordinarily wants Japanese yen to continue to fall in order to encourage its export market. It makes a whole lot of sense for them. It's good for the economy, and at any time they can change it. So once you have any small monetary policy change for UJ, you can expect that all bullish gain will be wiped out. It's in a normal fashion. Look at what they have done in 2022. Within some few weeks, they wiped out all the bearish gain. Look at what they did again in July 2024. Within some few weeks, they wiped out all bullish gain. So they will continue to build it, continue to build. After some time, they wipe all of them out. So this is how to trade UJ. Every pair has a strategic strategy. You must have a strategy for every pair. The movement is not the same. UJ is diabolical. You know, it's very, very diabolical. That's what I see.